Abneesh Roy, Executive Director, Research, Nuvama Institutional Equities, joins in to speak on this morning. Abneesh, very good morning to you. And of course, we'll get to FMCG, which is where your expertise really lies. You track that. But I want to get an overview on the markets first from you and the kind of uncertainty we've seen. Even though we have range-bound trade today, do you think markets are now looking at other factors apart from the disruptions of what's happening geopolitically?
Yeah, I think I'll speak more on FMCG. Yes, markets will be volatile based on geopolitical. Crude clearly is a monitorable, but clearly we are positive on FMCG in the FY27 perspective, and we see multiple reasons for that. What we are seeing clearly is we are seeing pricing growth coming back for the sector. If you see paints, 2 round of price hike by the market leader has been announced, so that clearly is a positive for FMCG from a market perspective, because as you rightly asked on the geopolitical issue, a lot of other sectors which have, say, exports, etc., will have that issue. Even in FMCG, Emami and Dabur will see this issue in March month and April month also, that Middle East will be quite challenging, because if crude is not coming, then obviously FMCG is quite difficult to take from India towards Middle East. So that is a challenge for Emami and Dabur. But for many other companies, Middle East is quite small. So we are seeing that interest in the sector is coming back because of pricing power, and local players will lose market share, right? See, in most of the FMCG paints, there is 10-20% kind of market share of local players. They will feel very challenging in terms of working capital. They'll cut down advertising promotions. So we are always market share gain for the market leader in these kind of scenario. Of course, Q1 paint sector, FMCG will see margin pressure. But Street is now looking at a more long-term, that FY27. Yes, El Nino risk is there in the second half. Q1, there is a margin pressure. But frankly, every sector will see challenging times because of the Iran crisis. But overall things, if you see pricing growth, operating leverage, and definitely market share gain, those I think market is taking positive from a construct perspective for the FMCG.
Okay,
yes.
so it's a strong argument to make, Abneesh. And I guess to a certain extent on Friday, a lot of buying seen in some select FMCG names, even the frontline companies. My point to you, though, is just to counter that just a tad bit on expectations, which is, for example, for an HUL, after the last quarter results, where the expectation was that volume pickup would be seen in FY27 in the first half, and it would improve further in the second half. If there is going to be a cost escalation, and okay, fine, if they have pricing power and they don't have to pass on as much as the smaller players, there will still be a challenge to that volume growth, won't there be?
So good question. So if you see what you have said, actually that is something which has already played out. And that's why Hindustan Unilever, Asian Paint, and many FMCG stocks corrected in the initial time frame of the Iran crisis, because crude oil and palm oil, etc., are a key raw material for HUL and most of the FMCG. So that valuation comfort we got. These days, how it works is near-term results really matter. So if you see, the start for FMCG sector in Q4 has been extremely lucky, extremely strong. So we saw VST Industries result, that's a tobacco company, very strong sales growth, very strong EBITDA growth, but that was on a soft base. Then we saw Bajaj Consumer on extremely strong beat versus our and very strong numbers. Now Nestle results are there tomorrow. We have already published a preview. We expect strong numbers from Nestle. Even for Hindustan Unilever and Asian Paint, our sense is we should see Q4 broadly the recovery will sustain. So for Asian Paint, we are building in 9% volume growth in our preview numbers. But we expect that given Asian Paint is so aggressive, we will see beat to that. That is our expectation. Even for Hindustan Unilever, what you said, Q4 versus Q3. Q3 was a good recovery, right? Company saw 4% volume growth and 5.5% sales growth, which was a multi-quarter high. We expect that even in Q4, we should see recovery in HUL sustain. So how market sees these stocks, and that is the right way, that yes, initial Iran crisis, already it has played out on the stock correction, which we saw. Then the market sees, okay, Iran is now getting factored in. Now what? So yes, as I said, because start to the Q4 result has been strong, and as I said, in Asian Paints and HUL, I do expect that overall Q4 numbers should be decent. That's why I think the valuation comfort is coming back. Of course, sector rotation happens. Initially, we did see that IT sector in the last 2 weeks, there was a comeback. So yes, sector rotation also is happening, and crude from the top has corrected. So whenever you see that geopolitical issues are getting resolved, people feel that, okay, yes, FMCG, the stocks have corrected, there's a linkage to crude, then those stocks come back. So what you said, I think it's a mix of all this rather than just, okay, no sector will keep correcting based on the same news, right?
Agree, completely. But okay, so correction is one. The other thing is, Abneesh, the recovery, right? And there's talk of Asian Paints at least having hiked prices, and other companies might follow suit. And this is the second hike, I believe, in the last 2 months. What does this mean for the paint stocks fortunes for Q4 and Q1?
Yes, it's a good development. I think in paints, if you see first round of hike, which Asian Paint took was around, yeah, can I go ahead?
Do.
Yeah, 6 to 8% hike Asian Paint has taken, which is a positive. Apart from that, in the second hike, which came over the weekend, we are expecting it's a 3 to 5% hike. So if you see, it's a very sharp double-digit hike if you combine both. Generally, Asian Paint is quite aggressive in the recent times and in inflationary year. Please note there is 25% market share of local players. Even Birla Opus, if you see, has already taken one hike. We expect that even Birla Opus and all other paint companies will eventually match Asian Paint on pricing, because this industry, if you see, only 40% do have pricing power. So in spite of all this Birla Opus and inflation, if you see, there's a lot of concern that will Asian Paint be able to pass on. Just see how quickly they are passed on. And my sense is at a $90 also, crude oil, these two hikes are now going to overcome the entire inflation. If crude moves to $100, I think one more hike might be needed. So we would monitor that. But I would say that even if crude moves to 100, I think Asian Paint will take one more hike. Because as I said, you operate at around 40%, paint companies operate at 40% gross margin. So this kind of inflation you'll have to pass on. And as I said, market leader always takes market share in this kind of year. And in fact, I see a silver lining that the local players and the new player clearly have not seen this kind of a volatility in the raw material. And as I said, the advertising spends and promotions will be cut by the new player and the local players. I think that's a market share gain scenario for Asian Paint. So yes, in Q1, of course, there will be margin pressure for entire FMCG and the gross margin even for paint companies. But as I said, May 5th when the second hike is happening, I think the entire hike inflation is being taken care of. So there will be some pressure, but structurally investors will see what is the medium long term. And if you see how this industry behaves is when the inflation actually corrects, you see that players will still hold on to the pricing for 1 or 2 quarters. So that's where I think the entire stock up move happens. Plus, as I said, in Q4, I expect Asian Paint to report a good volume growth. Okay. So we are positive on the Asian Paint in that space.
Abneesh, before we wrap up, top FMCG pick, top paint pick.
Sure. So in terms of near-term numbers, I think Marico, Nestle, Tata Consumer are looking the best. In terms of paint, I already answered. Asian Paint is our top pick there. We are seeing very high aggression from Asian Paint, and Asian Paint will take market share from local players in this scenario. In terms of crude recovery, clearly Godrej Consumer and Hindustan Unilever are also good place, but you'll have to monitor crude oil for that because it's so volatile. But Godrej Consumer and HUL have high indexation to palm oil and say to the packaging cost also. So if crude corrects, I think they are good plays on that. So we would add those two names from a crude play. So these are our topics, Marico, Nestle, Tata Consumer and Asian Paints.
Okay, fantastic. Fantastic. From a fundamental perspective. Thank you, Abneesh. I mean, the foremost voice really on the space that you can ask for, and very clear response over there coming in from Abneesh Roy of Nuvama. Let's talk a bit about BHEL. Companies' order inflows in FY26 have fallen sharply. Let's pull up the stock price as well.